I'd like to go through our 2025 market forecast with you and cover what interest rates might do, what home sales might do, and also home values might do going into 2025. So let's dive right into interest rates. It's been such a big topic. Recently they've gone up, they've gone down, they've gone up, and right now we're forecasting that through 2025, they should be slowly reducing throughout the year. Now, I would expect that they would probably end up somewhere in the low 6 to 6.5 range, with some programs out there, maybe like a 5-year ARM or a 7-year ARM where you can get into the high 6s. But I think we're gonna see them fluctuate around that range throughout all of next year, which isn't necessarily a bad thing. Now, this isn't just my opinion, but it's also the opinion of Fannie Mae, Freddie Mac, Wells Fargo, and the MBA study that's done annually too. Now, what's going to happen as these rates do come down into the low 6s, it's going to make the housing market more affordable. It's also going to make buyers much more confident at going out and buying. And what's going to happen is it's going to drive prices up because we still have an inventory shortage, and that's not going away anytime soon. Now, something very important is that question about inventory, because it's doing a lot to drive appreciation. And even though the housing market has 35% less sales in the Charleston area than it did 2 years ago, we are still seeing appreciation, and that's because inventory is so low. Now, of a massive survey that was completed, 50% of homeowners said that if rates are in the low 6s or around 6, they would consider selling their home and trading up from their low rate that they locked in several years ago. And now that's a really important thing to recognize, because as a home buyer, you want more choices typically, and the more choices, the better. Well, if you see rates coming down towards the 6 range and getting below into the 5s, that's a trigger point where more than half of homeowners have said that they would then be motivated to put their home on the market, which will increase your selection of homes. Now, also keep in mind that a third of the people that took the survey said there is no rate that would motivate their decision to move, meaning that rates have no implication on their decision. Rates could go down and it doesn't matter, they might not move. Rates could go up and they might not move, or rates could stay high and they'll move, and the rate doesn't have an impact on their decision to move. So as a lot of people are saying out there, why would homeowners move when they have such a low interest rate? Well, a third of the homeowners actually don't care what the rate is. If they want to sell, they're going to sell. That's a bigger number than I anticipated. And that survey was done by bankrate.com. Now, as far as total home sales go, like I said, from the peak in the market several years ago to now, there's about 35% less home sales. However, it hasn't had an impact on appreciation. It's still a very healthy market. But what we're forecasting is a slight uptick in the amount of home sales that happen next year, largely because there's a lot of people that have been in their homes for a long time, longer than usual, that we'll start to see move. Also, with rates coming down slightly, we'll see a lot more buyers coming out of the woodwork that have put their home buying decision on hold, and they're gonna have higher confidence and go out and make some buying decisions. And so we should see a slight uptick in the amount of home sales that we see next year over this year. Now, if you're a home buyer, waiting till next spring or summer when those rates come down could give you an opportunity to find a better home, or maybe look at more homes with the hopes of finding a better home. But also the reality is that there's going to be a lot more home buyers out there at the same time, so you're gonna have a lot more competition. So even if you think you might find a better home at that point in time, you're gonna have more competition, which might mean that you might not be able to get that home, or that home that you could purchase today might be out of reach financially next year because prices have gone up because of that increase in demand that's come out. And what I always like to say is, the only right time to go buy a home is when it's right for you. There's all these factors that are in the market, and if you're ready to buy and there's the right kind of home out there and you can afford it, why not jump into home ownership now and then take advantage of that ride up in appreciation? And sure, even though rates might be higher today than you anticipate next year, if you find the right home, and again, it's the right price and you can afford it, lock in that price today, lock in the higher interest rate today. However, ride that price up in value with appreciation next year. And when rates come down, you can go ahead and trade that rate in and refinance into a lower interest rate, which right now lenders are offering free refinances for a couple years to incentivize buyers to buy now, knowing that they're going to want to refinance in the future. Now, the national forecast for home values next year is 3% appreciation, which is actually pretty healthy. 3 to 4% is what we typically see over a long period of time. Now, some markets might perform differently. You might have some markets that aren't going to do as well, and you might see home values decrease, or that appreciation be lower than the national average. In some markets, it might perform better, and you might see home values appreciate 5 to 10%. Here in Charleston, it could be a lot different. I've heard anywhere between 45 to 60 people moving here every single day, and that's a lot different than maybe some of these small rural cities in the Midwest or so that has the population decreasing, where they might not see the same appreciation nationally, but because we have such a big influx of people moving to the Charleston area, and the new homes being created isn't keeping up with the amount of people that are moving here, then we're gonna see more than the average for the nation in appreciation. I wouldn't be surprised if we were around 5%. I'd say that conservatively, and maybe even upwards of 10% appreciation, which is a very big deal if you think about where you could buy a home for today, call it $500,000, but then next year you have to pay another $50,000 because of appreciation. And that's real value that's been added there. And part of it is that it's such a desirable area, and a lot of people are moving here from areas that are more expensive, and so the values here seem like a really good deal to them. Whereas somebody like me that's lived here for a very long time, I look at these prices and I remember when they were much lower. But I'm still out there buying because I know the values are going up. But then you get somebody that's from out of the area, and again, they look at her values and her taxes and it looks very inexpensive. You also have to remember that there's never been a time in history where people have had more equity in their homes. So people are selling, getting all this equity and coming in and putting down 30, 40, 50% down payments on their home purchase, which is really large in comparison to the past. But everyone has so much equity right now that they're able to put these big down payments down. And so it's helping them afford, even though prices are more. And so we're just in an area where people do have a lot of money that are coming here, or people that live here have a lot of money, or they have a lot of equity that's built up in their home. So these transactions that are happening with buyers, you got to think that they're doing it because they perceive it as being a good value. And so that's a big reason why we're going to see values increase here with interest rates coming down next year. Also, economic projections for 2025 are positive, which means good things for the housing market. Also, there are some people that are pessimistic about what might happen with the economy. And I'll go back for the last 80 years. And of all the downturns that we've had in the economy, there's only been 2 times where economic downturn translated into home prices decreasing. Once was in 2008, which we know that home prices over a 3-year period, decreased dramatically. Where I'm originally from in Michigan, decreased 50%. Here in Charleston, probably about 15%. So it just depends on where you are. But again, that took place over the course of a 3-year period. However, subtract that and a small blip in the 1990s where home values went down about 3%. Aside from that, every other economic downturn that we've had, the housing market actually performed better. So economic downturn doesn't always translate into home prices decreasing. That's something very important to remember, and the two aren't necessarily always going to follow the same trend. If you have any more questions or any thoughts or concerns or any different opinions, I'd love to hear them and learn about what other people think and feel. So feel free to reach out to me directly, and I look forward to talking to you. Thanks.